Shift focus back to what should be the stock of the day. Infosys posted Q3 numbers on Friday. The revenue has beaten estimate, but of course there was a contraction in margin, and the company has raised the FY19 guidance in constant currency terms. Girish Pai, Head of Research at Nirmal Bang Institutional Equities, is with us. Girish, good morning. Thanks a lot for joining us in our studio. So, some bit of outperformance versus TCS is something we've already seen from Infosys, but is there enough in the numbers to perhaps warrant some more re-rating for Infosys?
Yeah, relative to TCS, my sense is that the large P multiple discount that existed will probably contract as we go into 2019, because we believe that in FY20 growth rate of Infosys is going to pick up a little bit more versus FY20 versus FY19, and the gap that existed in terms of growth rates is going to contract. So there's going to be a P multiple discount, contraction that's going to happen. So that could be a near-term driver of the stock price. Plus the buyback which is being done could be another support for the stock. But if I look at it from a medium-term perspective, if I take a 12 to 18-month view, I think one needs to be cognizant about the macro environment that's developing in the US and elsewhere. And my own sense is that, we put out a downgrade in the sector in late December, where we're calling for a 0% growth for the industry in FY21. In such a circumstance, my sense is the up move that one's going to see in Infosys would probably be a good time to sell.
Girish, hi, morning. But what are you worried about? Because the deal wins seem to be quite strong. I mean, Infosys also, in a lean environment, has reported this large deal of, almost $1.5 billion. So what is your primary concern on the back of which you've come out with this no growth call in FY21?
Right. So I think if you look at the commentary of both TCS and Infosys, I think they're basically mirroring what they're hearing from their clients as of now, as of this point in time, and what the clients are spending as of now. But looking out into 2019 and more into 2020, our view is that US is probably going to go into a soft landing situation where growth, which was about 3.2% in 2018, real GDP, will slow down to maybe like 0 to 1.5%. So in such a situation, we believe that industry growth is going to slow down to 0, and we believe that TCS and Infosys will not be immune to that kind of slowdown. See, I think the key worry from me is from a BFSI perspective. While the commentary near term has been fairly good, I'm worried about the fact that the yield curve is flat and potentially can invert, which will probably mean pressure on margins for banks out there. Already, there's been comments from Infosys saying that asset management companies have been kind of a bit cautious in terms of spending because of the AUM contraction that's been seen. And there was commentary from the management that if yield curve remains where it is right now, there could be some pressure on bank earnings, and therefore could be pressure on spending by these banks going forward.
Girish, good morning. But, I take all your points, but the magnitude of the guidance revision has been so significant that I'm wondering whether this growth at any cost kind of a strategy that at least right now seems to be the order of the day, whether the market is going to take that with both hands and ignore some of the margin issues, at least in the near term. I mean, what do you think is going to weigh more on the stock?
See, in the very near term, my sense is that Infi stock is going to move up. Already the ADR has come out and done a 5% increase. So I think that kind of a up move in the stock is quite likely, maybe a little lower than that in the Indian market. But I think that kind of an up move is likely in the very near term. And obviously the buyback that's happening is going to keep the stock price up. And they talked about a maximum price of 800. So it's pretty far away from where it is, where the stock price is right now. So near term, I think there is support for the stock. I'm more worried about towards the second half of FY20 and more towards FY21. I think a broad sense of the market is that we'll probably see high single digit to maybe even a low double digit growth for Infosys in FY20. I think that's broadly priced in. Maybe an up move today can price that in also. So to that extent, I'm more worried about the medium term stock price picture.
Okay, so just to summarize it, this market-leading sort of outperformance that the sector saw in 2018, you think it's a thing of the past?
Yeah, that's the call we made. We said that 2018 has been a stupendous year relative to what we've seen in the past, in the previous years, basically driven by the fact that you had the tax reform-related capex up move that we've seen in S&P 500. So for many years now, capex for S&P 500 companies have actually not moved up. So 2018 was the first year we've actually seen some material up move in capex, and we believe that that's largely driven by the tax reform. which when we look at the growth rate going into 2019, we believe that the capex is actually going to come off. In fact, There have been some CFO surveys floating around saying that, you know, some 50% of the CFOs in the US are kind of worried about potential recessionary trends towards the second half of 2019. So my sense is that if a CFO is worried about growth in 2019, I think they're going to be fairly conservative when they actually go out to spend. I think that's the thing that one needs to keep at the back of one's mind when we invest in IT stocks.
So, you know, the buyback price is giving you a 16-17% upside. Now, we don't know how small the acceptance is going to be, but would you advise tendering in? So given your views overall?
No, I don't think it's a tendering process. I think they're buying it from the open market, from what I understand. So it's going to be a fairly different process compared to what the previous process was. So they said they're going to buy from the open market till a maximum price of 800. So there is that up move that one can potentially play, in the sense that if there's going to be money in the market which is going to you know, absorb some of the selling that's going to happen, may potentially happen. I think that could be a point where one can you know, sell into the strength that's going to come through.
Okay, we leave it at that. Thanks so much for joining us. Well, that's a cautious view actually coming in from Nirmal Bang. They say there could be a no-growth situation in the IT space come FY 2021. And in the near term, though, they expect Infosys to move up. We'll take a short break on that note. Dipan Mehta, a member of BSE and NSE, will join in just moments from now with some long-term stock bets.